You know, in spite of all of this negativity, there is one stock which has been skyrocketing in a weak market. In fact, if you see the 4 or 5 day performance, stock is up nearly 55 to 60% in the last couple of days. And we're talking about a Tejas network. What's working for them all this while? Because Q3 was pretty weak for the company, but in spite of all of that, a good buzz around it. My colleague Jasmeet joins it to tell us more. Jasmeet, I mean, we've picked Tejas Networks as a stock of the day, but lots brewing there. If you could just take us through, what are you picking up?
Well, Hiral, thank you for that. As rightly said, the stock has surged nearly 55% in last three trading sessions. Well, this thing comes after the company has received an NEC order from a Japanese corporation to supply the 5G manufactured and supplied units for telecom company. Well, in terms of overall stock performance, the stock is still down 48% when you look at a 52-week low level. So, though we have a surge, but the stock at a low base is still trading below its one-year average. Now, in terms of the key trigger, the first one is the strategic 5G deal that the company has signed with NEC. While this deal is to extend manufacture and supply the overall massive 5G radios. While this deal also helps the company expand their base, given NEC is a global telecom body and has access over 75 countries, this deal will help company to gain revenue, but also increase the global presence and be a good alternative for Chinese product. Now, the second trigger is the overall strong volume. The current volume which we see are roughly 14 times the 20-day average, which is pulling the overall stock price up. Now, third is the PLI scheme. While the company is a big beneficiary when it comes to the overall PLI scheme, which they get under the 5G and the broadcast radar, so which the company has been receiving in the terms of the refund from the government. The company recently received 70-odd crore in the month of Feb on the back of the same PLI scheme. While the fourth one is the Tata factor. While the company is backed by Panatone Finvest, which is a subsidiary of Tata Sons, and Panovest currently owns 53% stakes in the company, which is also a positive key trigger. Now, what is next? What to expect going forward? Firstly is the inventory risk. Do we have also some concern areas for this particular stock? The inventory risk, current inventory stands at 2,200 crore, while this is on the back of the delayed BSNL deal. Given the BSNL deal which company signed back in 2024 is still not executed, which is creating overall pressure on the overall company's inventory level. The second is the execution risk. The net debt stands at 3,300 crore. This is again on the back of delayed deal where they haven't paid the money back to the debt holders, and further that's what creating the pressure on the overall balance sheets. Well, third is the high cash burn. Company is currently funding its operation by the reserves they have. While the fourth one is the CEO position is still vacant and the company has no further commentaries on that. They're still looking for the right candidate, which in turn makes an overall direction weak for the company going forward. While the key triggers which can be going forward with the BSNL expansion, once they receive the PO order BSNL deal, that will be a key expansion for the company given the revenue flowing for the company, and company has been loss making for last 4 quarters on the back of the similar things of high debt and high inventory risk. Lastly, the company is pivoting towards a 5G model, where they're getting international orders. Currently, international revenue forms 15% of the revenue, where the management targets 50% going forward. While that's some trigger which will be watched out carefully going ahead.
Okay. Thank you, Jasmeet, for that.